Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so if you saw my last video, just a little reminder, I said that it looked like we were about to sell off, and as soon as we started selling off, that we were just going to waterfall effect, full on just let go, and we did exactly that. Started pouring right over the side, and if you watch that video again, you will see that I called the bottom at 28,800, and that wick that came down here came down to 28,732. So I was basically exactly on. From that last video, we basically sold off a total of about 20%, basically 20%, straight down to the daily 55 exponential moving average, and then we immediately found support, got the bounce, bounced all the way up to the prior close. Since that daily close at 7, so we got an attempted pushback up initially and then just sold straight back off. Right now, we are literally about to cross the 8 and 21. Typically, what you will see in this situation is one last attempt to come up and save it. So we could say that this was that attempt and that it failed. But to tell you the truth, more often than not, it will actually come up to the breakdown point, which also you'll remember that I called out. That was like essentially our horizontal support line that we needed to hold, and that came in right at 33,978, so 34,000. You'll see that was the top right here, the bottom right here, bottom of both these candles, and then we just dumped straight through it. So it's not unrealistic to think that we're going to come back up here to 34,000 and retest it as resistance, possibly even get slightly above it and then sell back off. But it looks extremely bad right now. It looks very likely that these are going to cross. The only way they will not cross is if we come back at least to 34,000 or above. All right, so what does that mean? So we got the parabolic SAR coming to the downside. It's going to start accelerating very fast if we do not pump back up here immediately. We crossed below on the TJD TDMACD. Histogram is red, has been red this whole time. I've been saying we were going to sell off since literally the absolute top. We got one attempt to kind of bounce it right here. We saw green histogram. Once we went below the slope line, flipped it over red, just like I said. Basically, that dump was the nail in the coffin, obviously. Stoch slope, or I'm sorry, the jewel thief basically gave us the hard sell at the absolute top. Big old S, hard sell, absolute top. TJD, TDMACD, last green histogram, absolute top. So, you know, basically the indicators work perfectly. They are available for free. If you are new to the channel, I highly recommend you go back and watch my last video, especially the end when I call out the exact target. You will also see in the description you can get all these indicators for free on TradingView. Go check them out. Like, subscribe, all that good stuff. I know I don't say it enough, but, you know, I do appreciate the support. Also, we got the knife sticking down here all the way at the bottom, down in that 20 zone. Because we got such a powerful bounce, it's not as pointy as we like to see. We normally like to see it come down and literally make like a nice strong knife point like that. We didn't really get that, but if we started to bounce this right now, it would curl back up and look a little more aggressive, or if we sold back off. But, you know, this is basically just, as far as I'm concerned, this is a range zone right here. We're in a range trading zone between 28.8 and 34,000 right now. Looks like just a range we could oscillate in while we make up our mind on this you know, crossover. And the reason I'm saying that is I want to switch over real quick to the CME chart. This is why I'm saying it, is because the CME chart, you know, basically the price action is exactly the same, but because this bad boy closes on the weekends and tomorrow is Friday, or technically today is Friday, it will be closed for the next 2 days. You know, it closed that Friday, you know, in the evening, and then it'll be closed all through Saturday and Sunday, reopen Sunday night. So we could see anything happen on spot price in the meantime. So I think we're going to probably bust around in that range, possibly even try to break back to the upside and save price action, because there'll be a lot less like liquidity in the markets, because half the market will be closed essentially. You know, if CME is closed, it's a lot easier to move price action around. Now also, that would be an epic fake out. If we got that sell off, found support, bounced back up, averted the cross, and then this reopens, you know, Sunday night, Monday, and, you know, it never would actually cross. Because, you know, when this candle prints tomorrow night, if it's under here, but it's not substantially lower, it's not going to cross. And even if it does, it takes pretty much like 1 day, you know, of being crossed to pull it down and cross it all the way. So, you know, here's the alternative. So that's a bullish kind of scenario that we could avert this cross and get continuation to the downside. We got a respectable move. I'll show that basically, but we hit the 382 Fibonacci target perfectly. And we could continue to the upside. Shook out a lot of weak hands. So that's the bullish case. Bearish case is if this decides it wants to get continuation and sell back off, one, we're still below the 21. So, we don't want to get bullish by any means yet. This support level where we closed the daily right here and where we had the support right here was basically at 31,500. We also had, we closed this gap right here because we closed right here. We gapped up and then we sold back down and closed the gap. But our next gap is right down here. So the next gap starts at 26,500 and goes all the way down to 23,750. So we could sell back off to 23,750, close this gap. And where's that going to put us? We don't have to sell all the way down. It could sell down to like 24.5 or something like that, close the majority of the gap, and I'm completely fine with that. But where's that going to put us at? It's going to put us exactly at the 50 simple, which is typically what Wall Street traders use, or the 55 exponential. So right now, we called out the big move ahead of time, called out the top ahead of time. This looks like a range to me. Anything could happen in this area. I don't see an indication in one direction or the other. I think we need basically like a couple days or possibly the weekend worth of price action before I can make a decision one way or the other with conviction. And again, this is an area where we could save this and not actually break down and get continuation, even though price action did the same thing. The indicator oscillators are not in the same position. And once again, same thing here. We got all those red histograms in a row. We got the one green bounce right here. We still have blue price action. Slope is still blue. And the histogram is still technically above the slope. And typically this is what happens the first time, at least when you come down to the slope. You either bounce straight off it or come slightly below it and then get strength coming back up and save price action. And that's exactly what happened here. Now we are below the 21. So I don't typically like to get bullish on an asset while we're below the past moving average, because if we just hang out right here long enough, it's just going to cross to the downside. But given the situation and everything going on right here, I don't think it's unrealistic to think that. Now let's go down to a shorter time frame and kind of see what this is telling us, because again, we got the same thing going on where it's basically telling me it could go either way. Here we bounced down, we broke down, we got the hard sell, we crossed this to the downside, we found support. Previously we had never touched the 89 in purple right here. Here we came down, touched it, but we couldn't get back above the 8 after that. We could not get back above the red 8, and that was confirmation that we were about to see that dump, at which point in time we did. We got that massive dump down here. Big move, shook out a lot of people, but now it's doing exactly what we talked about. We had at the absolute top right here, this flipped over red. We've had the red slope line the whole rest of the time. I don't like to get bullish on the Stoch slope, or I'm sorry, I don't like to get bullish on the TJD TDMACD until I see at least two greens in a row starting to roll this back over and, at a potential like support, horizontal or, moving average, whatever. Here we bounce the 200 exponential moving average. The problem is this is the futures chart, CME futures. Typically, traditional traders are going to use the 200 simple. So even though we bounce the 200 exponential, like how we did exactly, it's more likely that we're going to come down here and tag the 200 simple still. So that would put us at 27,900. So basically 28,000 right here. So I don't think that's unrealistic to think that we're coming back down to 28,000. We did, however, bounce that exact sell-off point right here. It's maybe slightly above it. So it's once again very likely we could come back down and test that exact zone. And, essentially that's like a wick support essentially. This is what we're paying attention to though. The Stoch slope sold all the way down into the bearish control zone. Bears are in control. Bears are definitely in control because it's a nice thick green area. We got the hard buy symbol. It's starting to curve back out. So is this just a retracement? What'd we say? In a bull trend, these green zones are the absolute best buy areas. The best areas. That was our one right here. Perfect buy area. Massive continuation to the upside. That was our last one right there. Perfect buy area off the 89, massive continuation to the upside. And now here we got another one. The problem is it's not a sliver like we like to see. This one is pretty thick, definitely telling us there's potential chance that this is about to be a trend change. So we have to pay attention to that. But as long as we're in an uptrend, which we are, You know, even though we crossed the 8 and the 21, even though we crossed the 50 and the 55 to the downside, even though we're about to cross past that 89 and we're below all of them, we are still on top of the 200 moving averages. And, you know, on the 4 hour, I look at those as bullish. I definitely look at those as bullish and opportunities to buy, accumulate, you know, buy the bottom of a potential sell-off and then, you know, reposition for a big move to the upside. So, you know, full disclosure, I did take long positions. I wasn't a short on the way down. I have my spot, obviously still as well. Took quite a bit of profits throughout this top range right here. Reaccumulated off of these key moving averages. I basically bought just above, you know, I said 8,800. I bought just above 29,000 because I don't like to miss trades by like a couple $100, getting greedy, trying to catch absolute tips. I mean, it's always fun, you know, to catch it exactly perfect, but I just don't like messing with that. You never know when one exchange is going to blow right through it or, you know, fall slightly short, and then you're going to miss out on an amazing bounce. It looked a little sketchy there for a minute, but you'll see it didn't hang out at all. What alarms me right here, though, is on this 4 hour, we basically got that bullish candle back up. We got this nice rejection right here, this great hammer. That's a hammer right there. You know, it's the exact opposite of a shooting star. You get a little body, you go try to go up a little bit even, and then you sell back off violently or vice versa. But when it's all said and done, you have this massive wick on the bottom, and then you have this little body right here. Basically, you know, price started dropping down, try to get hammered down to the downside, and then the bulls were able to pick it back up. We close here, we get a nice candle, got rejected though at the 8, and then we put in a bearish engulfing candle right after that. Now granted, there's still 2 hours and 38 minutes left. Anything could happen. We get all the way back up here to the 8, pop up, take out that parabolic SAR, kill this red downtrend, and boom, we're right back in the races, at least back up to the 89. Retest that breakdown point at 33,640, or more likely 34,000, because that would line up a spot as well. Looks great. Coming out of this area, flip the Stoch slope over blue, got the hard buy, coming out of the bearish control zone, perfect spot to reaccumulate and potentially get continuation to the upside. So once again, mixed messages as far as I'm concerned. Mixed messages. I don't love it one direction or the other. That's the truth. So let's flip back over now. And, you know, this is our daily again on, I'm on Coinbase, but again, it doesn't matter which exchange you're on. Now I'm going to flip back over to the 4 hour on this one, and we want to take a look as well. So here's the difference. We sold below the 200 moving averages here. The 200 simple and the 200 exponential, the bright one. So we're below them. So now, because we're on a 4 hour, I can't get bullish on an asset while we're below the 200 moving averages. Now granted, again, this could be a great area to buy off of, but I would rather see this bounce up like this, stay above it. So we basically like bounce above it, close, and then we open this candle right here, and then we close another candle on top of the moving average, and then I think we'd be likely to get continuation, or at least take out the 8 moving average and close above that, or at least take out the parabolic SAR, the red dot right here, or potentially even cross the 8 and the 21 back to the upside. But, you know, that's a lot to ask. You're going to definitely miss out on some price action if you're not already positioned. But once again, you know, I would rather get the meat of the move than worry about getting the absolute tip of it. Even though I got an excellent entry off this, and I'm, you know, very much so in profit off that entry, especially so on some of the altcoins that I entered. I did take a position on DOT. It has been so strong through all this. It barely sold off. Basically bought the bottom on DOT, and what else did I get into? Man, I can't remember what other trades I entered into. I think Polkadot was the only... No, there was one other one. Man, I can't think of the other one right now. I entered one other trade too. You know, got a great buy off that one. It did not look as bullish, but it shot straight up. Man, why can I not think of it? Oh, Uniswap. Yeah, so I bought Uniswap as well. They sold off more violently, but got a really nice bounce. DOT was a little sketchy because I was trading that on Kraken actually, and it had previously got like a massive like 1 minute wick before this whole sell-off took place. It got a massive sell down and left a huge wick, like it was like a 20% wick or something like that down, and then it didn't even get back down to that on the sell-off, so I was a little sketch on that. But I was able to enter DOT and Uniswap. Both of them bounced all the way back up and almost crossed the 8 and the 21 back to the upside. Basically looked more like this price action right here as opposed to this clear breakdown like we're seeing in Bitcoin. So they both look really good in comparison, which is strange again because I'm not used to seeing altcoins stay so much stronger than Bitcoin overall. But, you know, again, you know, something weird going on. you know, people are bullish about some of these, you know, those two I think have pretty good charts overall, and obviously have pretty good technicals, pretty good fundamentals. I like those two specifically, but it is strange to see what's going on here. Ethereum sold off violently, more so than both those did, and I think Ethereum probably has the strongest, you know, maybe not strongest technicals. It took out its all-time high technically, but it was a throw over. That looked super sketchy and definitely was suspect. But, and it, you know, it did technically take out its all-time high, came back down, you know, got a violent sell-off, but that could be a good area to reaccumulate at. But I think overall, Ethereum probably has one of the best fundamentals in the market. You know, if you're going by actual fundamentals, you know, so much stuff is built on top of it. And, you know, fundamentally, it's a great coin. So to see it sell off so much less than some of these other, like, lesser new coins, I don't know. Makes me just think a little twice. So, but here on the 4 hour, you'll see, you know, we got the same thing. We got a massive hammer, rejection of lower prices. We got a nice, thick outlier volume candle, the same way we bought them right here. I would have really liked to see, I like that we got a bounce back up to the 200. I would have liked to see a close back above the 200, or at least an attempt back lower, possibly even take out the low, but leave another wick behind, because that's almost always a bottoming pattern when you basically come down, sell off slightly lower, and then you get a massive move afterwards. I would have much rather see that, because this to me is like a rejection of lower prices than a rejection of higher prices, which the rejection of lower prices is more, you know, by the wick size right here, and the volume. Rejection of higher prices was slightly less, but, you know, there was a massive move to the downside, so you would expect a more powerful rejection than this tiny little move up here and then sell back off. So again, I'd like to see it get back above the 8. I want to see it get back above the 200 exponential and simple. You know, as soon as we get back above the 8, I think we'll bounce up immediately, take out that 21 at like 33 and some change. Take out the parabolic SAR in red right here. We'll get the hard buy out of the bearish control zone. We'll get the cross. We'll get the X of the bearish control zone, and we'll see price action back up to the upside. And, you know, most likely, I would say probably at least come up to like 33,750, 33,750, and retest a breakdown somewhere in that range, 34,000. You know, and then we'll have to see what happens then. You know, probably, you know, break, retest, continuation. But, you know, again, these are the best buying opportunities typically is off the 200 moving average. And a lot of times we'll sell down below it, bounce around for a second, and then shoot back up, and we'll never come back and see it again. So, you know, I don't want to get too overly bearish on this thing or anything. So let's turn on a little bit of price action and turn off these moving averages, and I'll show you exactly what I've been paying attention to. You know, we obviously had, let's back it up for a second real quick. So we had this support. We have two main diagonal support lines we're paying attention to. We have this green parabolic trend line right here going all the way up. We have then this blue one where we were bouncing off the green consistently, and then all of a sudden we just started getting more and more powerful. And when we got more and more powerful, we basically came nowhere back near the green. And this is, you know, full on parabola. You know, we got squeezed here at that $20,000 range, you know, and then broke out to the upside violently. And then we never came back even close to it. We got, once again, another parabolic move at the top where we came far away from the blue, came back to test it. It failed, tested it back as resistance. That's why it's turned purple right here. It's now resistance instead of support. And then essentially came back down, started selling off. This area started to form a channel right here. We were getting clear interactions on the 4 hour in the center right here. The top, the bottom, came back to the center. This is where you typically get rejected. You get a bottom, a top, a bottom, a top, a bottom, and then you can't get past the halfway point, and then you come back down to test the bottom, break. And that happens in both directions. So as soon as we got the break, we would expect a retest. You know, this was our measure move for the break of the channel. It didn't happen right away, but we eventually got it. So we got the break back up, started putting in this ascending wedge. You know, this is a bearish pattern. We basically start floating back up, get the break of that, hit the measure move of that, and then now look, we started forming another channel. So we came down, touched the bottom of the channel consistently, broke up, top, you know, followed the top right here, broke down, all the way to the bottom again. You know, and it's this one right here, this more intense one. Back to the top right here, back to the bottom right here, back to the top right here, you know, bottom. But now look, we're inside of this other old channel now. We ended up playing out, you know, basically the measure move of everything. We got the measure move of this move right here. We got the measure move of this one. We got then afterwards the measure move of the break of this channel eventually. You know, I mean, we've gotten all our measure moves. So what I'm paying attention to now is the potential break of this channel and then a bullish measure move back to the upside. Now on this time frame, it doesn't look as clear what's going on, but when we switch to a lower time frame, you're going to see exactly what I'm talking about. But here, you know, we got that massive rejection of lower prices, that hammer, and then we got another one to the upside, rejection of higher prices. Now let's go to the hourly and look how clear this is, because this is absolutely beautiful. Look how beautiful all this price action is. I mean, it's absolutely perfect inside of these. So when you see this price action right here, we literally cruised around the bottom. You know, and if you weren't looking, if you didn't have this channel drawn in right here and you only had the orange support as your bottom and the green as your top, it looked like a breakout of the channel, the green line, orange line here, and then a rejection, and then a sell back off, like retest, and like potential continuation and a rejection again. That's when you throw this channel on here and you see what's really going on. We come back down to the heart line, come back down, break down to the bottom, come back, can't get to the top, break down to the bottom, come all the way to the bottom, get that wick. And where does that wick come to? It comes to the bottom of our old channel right here. So this thing is still relevant, you know, to some degree. And then we get that break of it back inside to the heart line of that channel, break out to the upside, and then fail. So it looked like we're going to break out of this one, look like we're going to break out of this one, and then we sell back down. What I would like to see right now is, and potentially bullish, if we come down here, retest this 30,175 basically. That's the heart line of both channels. We retest the heart line of both channels and then come back up, and boom, if we get a breakout of, that's not actually the right measure move, sorry, I think that's for something else. Let me put one in here. Basically might even end up being the same thing, but essentially a break of this channel and a break of this channel will give us this measure move from the breakout point. So if we come down right here, you know, and touch that 29,750, you know, potentially put in some bearish divergence, sell down real hard, but get a higher high on this 1 hour, you know, come back to the top, retest it, break through. That's going to give us our measure move right back up to 34,000, which is our breakdown point that we're paying attention to. So that would give us that breakdown, a potential retest of, you know, what was resistance or what was support would then become resistance, and then we continue to the downside. Or, you know, that's our relief rally, but it stays bearish. Or we break back up, get back inside, and then continuation, keep going back up. And then it's just going to look like a big old double bottom that we sold slightly down from. You know, we basically sold down a little bit more than this one, but that's essentially just that retest of the same area right here. Now, if we look at our Fibonacci's, what happened? We came down to the 886 of the Fibonacci right here. We came back up almost to the 618. So if we come down here, find support, that 786 is right in that same range again. I would expect to move up at least to the 618, at which point in time we would break out of this channel, and then I would expect continuation, and that lines up with our blue 0.5 here perfectly as well. So we have a lot of confluence telling us this is very likely to happen. But again, I don't want to get overly bullish on it, but you know, we got the hard buy right here out of the bullish control zone on the hourly. We put in, you know, show you right here. This was clear divergence. Okay, look how low this low is, and then that one is slightly higher low. And then here on price action, we put in this low right here, and that is a lower low clearly. So that's bullish divergence. You know, basically it took more energy to get the price. It took less energy to get the price more low, which means we're going to run out of buyers. It's not sustainable. You want to see the two things line up. Same thing here. You know, more energy right here, less energy right here, and then lower sell-off right here, and then even lower sell-off right here. So you would expect it to take more energy to get the price lower, but we didn't. So then we get this bounce back up. So that could just be the 1 hour bullish divergence playing out, and then we're going to get continuation to the downside. It's just basically a dead cat bounce, relief rally, whatever. We come back down here, we retest those lows, fill those gaps. So you got to be careful here. You don't want to get overly bullish quite yet on this price action. But also what I'm kind of looking at is, you know, this top portion right here. You know, this is essentially, you kind of have like a neckline forming. You have like a shoulder, you have a head, you have potentially, you know, another shoulder comes down here and then come back up, and then you have like this, I mean, it's kind of janky looking, but it's basically like an inverted head and shoulders kind of like thing going on here. You know, again, it's kind of janky, but I like to see these when they're really symmetrical, but it doesn't always have to be like that. And it also lines up with these, you know, that's like the heart line of the channel right here. That's our left shoulder, hits the heart line. If our right shoulder comes down, hits the heart line, that's our head right here at the bottom of this channel. okay? And then on the top side, you know, we basically have breakdown from the heart line right here, a retest almost to the top of the channel, breakdown to the bottom of the channel, retest to the top of the channel, breakdown to the heart line, and then breakout of the channel itself is also going to be a breakout from the neckline. So, you know, that's where this measure move will come in. It could happen anywhere. It could happen at the same point. It could happen, you know, slightly different. But essentially, that's going to give us that. It's almost the same measure move anyway. You know, it'd be a retest of the breakdown. But, you know, there's a lot of stuff pointing us in both directions. But I think, you know, for either one of these scenarios to play out, it would have to come back down to the heart line. So I'm going to look for another buy off that heart line if it sells back off. You know, I'm going to close my short if we break out and start closing above this area right here. I'm leaving my long open for now as well. And then obviously I have my spot position. But, you know, anything can happen right now. But that's a lot of selling took place. This is a lot of selling that took place for us to not get a little more of a relief rally. Now, granted, you know, it's possible that people are just bearish now and we're going to continue to sell off. But, you know, we came down exactly to that 382 right here. So I would expect at least a pushback up to the 236. And then if we zoom way out, you'll see what's going on with these like long-term targets. Let's switch to a longer time frame again. Now, you know, ignore all the drawing tools. I got to pull them up to show these Fibonacci's. But, you know, this white Fibonacci right here, this goes all the way back down to 3,800. This is the March low. Goes all the way up to our top right here at 42,000 basically. 3,800, 42,000. Okay, that's our big boy Fibonacci. That 236 on that Fibonacci is all the way down here at the, and this is just crazy how it lines up, but that's at 24,000, which also lines up with, you know, the CME gap, which also lines up with that green parabolic trend line, which typically when you break above a parabolic trend line, you know, just like when we broke above this parabolic trend line, we broke above and got way away from it. And then when we sold off, we sell straight back down to it and then break through it. And that's resistance. We broke away from this green parabolic trend line. You know, imagine this move right here is just this whole move right here, but in relation to the green one, come back up, retest it, fail to get above it, sell back down all the way to the parabolic trend line, all the way to the 236 on the macro. That's that comes in at 24,000. And then at that point in time, you know, it's safe to say this is our top for this part of the bull run, but we would expect to bounce off that 236, come back up and put in a lower high, you know, and then get continuation to the downside and like a proper retracement, which would, you know, based on previous bull runs, it would be anywhere from like that 17,000 range back at the 382 to, you know, potentially that 0.5, or, you know, the last bull run that we had, you know, we sold off like 85% or something. I don't think that's as likely. I think this is more likely to be like stage one of a two-stage bull run. But again, you know, a 50% pullback would not be unrealistic. It sounds crazy, but that takes us back down to like 12,700. So that's definitely an area we want to pay attention to. But, you know, that's not just going to happen overnight. You know, it would happen in steps, and we would get some serious relief rallies along the way. But, you know, that makes that 20,000 look very highly potential. If we come down to 24,000, I think it's very likely we come down to 20,000 or whatever that 18,000 and so level was and fill that gap on CME. So, but now let's look a little more micro here, you know, and we can kind of see what's happening inside of that move. So this is assuming you're going to come out here and say this was wave one, that was wave two retracement. It's a shallow retracement, but it was like a 236. If you look at it from the bottom, you know, to the first top right here, it looks tiny on this, but from 4,000 to 10,000, 236 retracement, consolidation. And then you're basically saying like that was wave one, that was wave two. It's a weak, you know, wave two, obviously. And then that was our wave three. This whole big massive thing was our wave three. And then we're going to come back down for a wave four and then get a wave five up, which would be like a massive bull run up to, you know, possibly 200,000 or some crazy target, possibly 60,000, whatever. We don't know yet. We'd have to look at fib extensions. But regardless, that's our blue Fibonacci levels that we have drawn in here. And now if we zoom in close, what happened? We came all the way to the top. We topped out, fell down, lower high, came down, and when you look at where we came down to, that's our 236. We bounced that 236 perfectly. We come back up, retest this, you know, potentially even push above it a little, get rejected, come back down, hit the parabolic trend line right here, and then that lines up, you know, almost with our 382. So we could come back down here all the way again. The blue 382 is going to come in line at 22,650. You know, could find support right there. Consolidate or get a violent bounce back up, boom, and then straight to the upside. It's not unrealistic to think that we could get a 382 pullback and then continuation. Matter of fact, Bitcoin really likes 382 pullbacks and continuation in bull markets. So is it possible we get the 236 continuation? Yeah, we did it on wave 1. If you're going to call this, and we can even draw it out because it looks so tiny right here. It doesn't even look like realistic. But if you draw it out, oh, I'm sorry, it's right to right here. If you draw it out to right here, that was our 236. That was our 236 top right here. Comes down to the 236 perfectly. Let me change the color so it's a little more clear. So this yellow from 3,800 to, it would be the top right here at 10,138, comes back down to the 236 perfectly, and then bounces it, takes out the high, never comes back to touch it. So, it's a week 2 retracement because it's only down to the 236, and then it's a massive bull run after that. But I don't really see another great way to Fibonacci through this, because if you go to this peak right here, it doesn't even come back down to the 236. So you would have to say, essentially that it's either the way I just drew it, or this is all just one wave, and then we would expect a 2. So either way, at some point in time, you would expect, if this is from the bottom right here, and that's our 1, and then we're coming down for a 2, you would expect that we have to come down to at least a 236, of that whole big wave. Which again, that's going to be 23,800. So let's say 24,000, or again, more realistically, back down to that 16,800. So, either one of those. I like to use Fibonacci. I like to use Elliott Wave in conjunction. I like when it's perfect and it lines up and everything looks good, but it doesn't always work out like that. So I'm just throwing out the potential possibilities. That way, when they happen, we're ready for them, just like we were with all this stuff. Just like we were able to call the top, just like we were able to call the breakdown, all that stuff. So that's what I'm looking at right now. Could go either way. I see potential for either direction. I think it's likely that we're going to get a push up here, potential break of this area. I am long. My short will get taken out as soon as we bust out of this area. And then again, I'll do the same thing and take profits right here, either by... I'm probably not going to sell the spot that I picked up, honestly. And I didn't enter a leverage position. I just bought spot on my long. But I will probably just enter another short again when we start showing weakness off this area, and protect my position again and just accumulate more spot. But we'll have to see how it plays out. A lot could happen right here. You don't always have to know what's going to happen in these markets. Matter of fact, you never know. But you just got to pay attention to what it's showing you and go with that. I did notice this, that again, we still have over like 2.5 days, but we did sell off a little bit below that support line I'm paying attention to. So we want to see on Sunday night, does that close right at that 65.53 level? If it does, this really looks like a 1, 2, 3, 4 retest, and then it looks like Bitcoin dominance is going to go much higher, which would make sense with all of a sudden these altcoins are so powerful and staying so strong, and then all of a sudden we break off of them. Oh, and I forgot to talk about this before too. When we came to that 1, we topped out at the 200 exponential. When we came back down for the 2, we bounced the 200 simple perfectly. And then we broke through the exponential, and then we came back. So that tells me even more. That's a test of 1 exponential, 200, the 200 simple, and now we're back above both of them. We failed to hold above the 200 exponential, but we're still well above the 200 simple. And this on a weekly too. So when this starts curving back over, the blue exponential is already curved back over. That tells me we're entering a bull market on Bitcoin, like bullish dominance chart. The simple still would have to curve up to be like 100% bullish, but it's already looking. When you have one of those moving averages, the simple is obviously a lot slower to respond. So it would take plenty of time for this thing to roll back over. But if we stay above it long enough, we're going to get that price action. So, and then I just want to do, just as a recap here, I said exactly what was going to happen here. We were at 1,135 billion. I said if we sell back off here and touch this 8 moving average and come down to $811 billion, it's going to look like we topped out right here, but we could just as easily find support and get continuation, or find temporary support and then sell back off. We got to see how it closes. We got 2.5 days left, basically the whole weekend in front of us. A lot could happen this weekend. So we're paying attention to, what I'm paying attention to. We got the cross right here. I mean, that's almost all but guaranteed at this point in time. Granted, we could bounce it, stay back in this bullish control zone, and, or keep going. Market cap rises back up. We get another push. We get a consolidation, whatever. But, it's looking more and more like we're going to potentially be getting, I think, moves to the downside. So paying attention to it. I think we pretty much went over everything. I guess we'll pull up this one real quick. See what our volume indicators are doing. And this is exactly what I call it again. We started going parabolic away from this trend line. We expect to come back and touch it, come back to it and look for support. If we break down below it, we're going to basically like start flipping this over red. And, we're getting daily selling taking place, more selling than buying, which is, pretty obvious right now when you're looking at it. But we have all these reds in a row. We're way away from the median line. This is our zero line we came back to. All these reds called the absolute top, these reds right here. Getting a bunch of selling candles come in. We had all green volume candles coming in right here, and now we're getting all red candles coming in right here. And you'll notice that, just like we talked about, the yellow, we had blue through here saying that this buying was not only were we getting buying and volumes peaking, like getting stronger, but we were able to flip the slope line over blue. So here, volume peaked out to the upside. We started losing the slope. It just means we're losing momentum to the upside. There's less buying coming in, but we're still bullish technically until this flips over to red. So then we get all this red coming in, and now here we have flipped this over in blue. You can see at the bottom there. So it's saying that not only are we getting all this selling coming in, but not only is the volume getting higher, but it's strengthening. And now, if this gets continuation, it's just going to flip over blue and just keep going up. And that was our top, the green peak right here. Potentially this could be our bottom. And then continuation to the upside, but we got to wait and see. There's a lot of stuff pointing us in both directions. If we look at the 4 hour, and then I'm going to call it, same thing. We got some red come in here at the bottom. Got this red coming in through here, but just like I talked about, we see tons and tons and tons in green and no red, and then we see a little bit of red, a little more red, and then nice amount of green, and then we start seeing that red show, and now here we got a big thick red area. And, that tells us we're likely to see a little green come in and see this reset a little bit. But same deal down here with the VPCI. We have all reds, and it's always staying above the zero. And then we get one powerful green sell-off, and it, gets way away from the zero, come back to the zero, kind of go sideways, and then a bunch of powerful greens. We have not seen this many greens this powerful for the entire bull run. So that, to me, looks like a trend change. When it's flip down to the bottom and we're getting these powerful moves when we're getting powerful moves on the top, it's breaking through a key resistance, and that was our key resistance at 20,000. We broke through a key resistance, and then we get continuation in that direction, and you see a bunch of reds come after, and the greens were good buying areas prior to that. So now we see the opposite happen. We see it top out right here, sell back down violently, and then we see these greens come in, and it gets way away from the zero line, and then we come back to it, and then we get a bunch of greens coming in right here on that sell-off, break through a key resistance the same way this was breaking through a key support. And then what happened afterwards? A bunch of continuation. So what I would expect is, basically a relief rally back up, retest, and then, if we start seeing more and more, first off, when we see a red come in now, just the same way we looked at this as a buying opportunity because it was overall red, bulls were in control clearly here by all the red. The green should have been a buying opportunity. The first reds we start seeing come in here probably are going to signal to us it's a selling opportunity. So when we get that retest bounce up here eventually, and retest the breakdown, that's going to look like a selling opportunity to me. Basically, get out of open positions you have, potentially sell spot, enter shorts, whatever. It's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. That's what I'm going to do. Because this looks to me like a potential trend change. So even if you're not bullish or bearish one way or the other right now, I think, in my opinion, it's time to go, risk off or much less risk on. So I'm going to go much closer to spot as we're all through here. You're bullish, and then you're just using shorts to hedge your position, hedge against your spot against losses. Now it's going to look the opposite. I would expect to get a little red come in here and then a bunch more green, a little red, a bunch more green. And it just be like the reverse of what we saw in the bull market, reverse of what we saw in the bull market, reverse of what we saw in the bull market. So we're paying attention to the volume candles, big spikes, what they're telling us. We're paying attention to what is the smart money doing, more selling than buying. We're paying attention to volume and price confirmation indicator. So, it's important to pay attention to volume and see what's really going on here. Because a lot of times you'll see, a violent sell-off with high volume, and then you'll see a, continuation of the predominant trend, like weak with almost no volume. So here, vice versa, we saw a violent sell come in, with high volume right here and clear selling beating the buying. So it's not unrealistic to think we would get low volume like buying coming in here, just low volume buying, just floating us back up, and then boom, another violent sell off like this. So we need to pay attention to that, and then just like we said before, we had a high on volume, we had a lower high on volume, we had a lower high on volume. We were looking for a big volume spike to come in and tell us the direction of the trend, and that's what we got. So well, there you have it. I think that's enough for today. I'll be back with you guys tomorrow. I always work on the weekends too. Be careful out there, be safe out there, protect your account. It's better when you have indecision, you're not sure in the market, whatever. It's better to protect your capital and, wait until you see something clear and concise and you have a advantage against the market. Keep in mind all those things we look at: risk reward, probability of success, not just fundamentals. And people, remember what everybody was saying through here. They want your Bitcoin. Don't sell. They just want to try to get your Bitcoin. Well, if you sold at 40,000 up here, like I did, and rebought at $30,000, you had 25% more Bitcoin. If you sold at 40,000 again and, rebought down here, you had another, 15-20% more Bitcoin. If you sold again right here and, rebought like I did, and we get a push back up here, what's going to happen? We're going to end up with another like 20% Bitcoin. So it's good to hodl. It's good to hold. It's good to have, your position and stay in your positions. But there's nothing wrong with, picking up a little extra free money when the market hands it to you, especially on a silver platter when everybody's bullish. So, well, there you have it, guys. Crypto Trend Trader. If you like the content, if you got some knowledge out of this video, if you have any questions, if you want a CTA on a specific coin or asset or whatever, I do obviously like stocks, crypto, everything. This is just a crypto channel, but if you want to see something specific, just ask. Make sure you like and subscribe. Appreciate all the love. Sorry my videos are too long for some people, but you know what? I jam-pack these things full of knowledge, and the idea of this channel is to teach you so that one day you can take all these indicators I give away for free, put them on your own chart. You don't even got to watch my videos if you want. You could be on vacation, pop up your chart, look at it for 5 minutes, and make your educated moves. You can tell when there's a bull market. You can tell when there's a bear market. You can tell when there's a move coming up. You tell when volume is psyching you out. You tell what smart money's doing. And you don't need Crypto Trend Trader to tell you nothing. That's my goal, guys. I want you all to be independent. Matter of fact, I want you in the comments telling me what you see, because I don't look at every coin. I don't always see the moves. I don't always see the assets. But the money's out there. We just got to get it. And, if you play your cards smart, you take those, wait till you get that pocket pair. Wait till you get that good hand. You got a high probability of success. You can't bluff these markets. If you want to win over time, you make smart, educated guesses. We got to use our edge, not just fundamentals. Not just bull, bull, bull. We got to look at this market as breathing in, breathing out, breathing in, breathing out, breathing in, breathing out. So what's likely to happen next? We're likely to get a breathe in, and then we got to see where that breath out takes us. Do we continually put in, this was our lower low. I'm sorry, this was our high. That was our low. That was our lower high. That's our lower low now. That's a confirmed downtrend. We now have 2 points minimum on top. 1, 2, downtrend. 1, 2, downtrend. So we are in a confirmed downtrend as far as I'm considering right now. We could easily get a push all the way back up. Like I said, that's our top. That's our top. We could easily get a push all the way back up here to like 38,000 at this point in time and get another top and then sell back down and get another bottom. So just because I am looking at this as a downtrend does not mean there is not massive gains to be had to the upside, because there is for sure. And maybe this is when alts run, and that's why you've been seeing all this strength. Maybe not. I don't know. We're already back up to 900 billion, in crypto market cap. So, we gave up a lot. We gave up like over 300 billion. Already got back like 100 of it, or 60 or 70. 60 or 70. God, these numbers are so crazy. I can't even. It makes it so crazy to even think in trillions and billions and millions. And Crypto Trend Trader. And I'm at it.